Good morning, everyone. Hope you had an amazing weekend. It is 6 a.m., half an hour before the market is going to open on Monday, June 17th. On Friday, we were expecting a quiet day, but potentially some movement after the consumer sentiment. We did not get any movement. We got low volume still in this market, unfortunately, still a low volume, and it's starting to look like we're in those summer doldrums. We might be low volume. We might just be chopping sideways for the a month or two into the summer. So, consumer sentiment, we were talking about how it looked like we were expecting, or at least analysts were expecting, that consumer sentiment was going to be much higher, much improved than the previous month, but I was very skeptical of it. And it turned out that we got a, let's see, it turned out being much lower. So they were expecting 72, and it turned out to be something like 65, 65.6. So that missed by quite a bit, and the market did turn a little bit negative at that point, but we're still being propped up by Nvidia, by Apple, by Microsoft, by those really big giant stocks that just can't seem to come down at this point. So the market continues to be divided, or we continue to see divergence between the basically semiconductor stocks, AI stocks, or AI connected stocks, and the rest of the market. So when we look at our futures this morning, flat. Everything's flat. Dow Jones down, so flat S&P, flat Nasdaq, and then Dow Jones down 25 basis points. So pushing the non-random territory. So there's still that divergence between the Nasdaq and the Dow, and that is just disturbing, because what it's saying is, other than the other 500 signs that we have, that basically the entire market is being propped up by just a handful of stocks that are in this AI space. And when that corrects itself, it's most likely going to correct to the downside. So let's take a look at how everything is moving. Let's look at the dollar. Start with dollar. Dollar continue to move up. That is going to subtly put pressure on stocks, bonds gapping back down. So from Thursday to Friday, we gapped up and traded higher. Now we're gapping down to below the close on Thursday, and there is downward pressure. And I've talked about this enough times where I'm only going to say in 30 seconds that, hey, it looks like we're going to come back down to the top of this channel, and then maybe a little bit further. I'm expecting to come at the very least to this MA50 line relatively soon. So any of the example trades that we've been giving is they're doing just fine. Remember, those are longer term views, they're not short term views. So TLT coming down, that's going to put pressure on stocks, especially tech related stocks, although will it be enough to curb enthusiasm on things like Nvidia? I don't know, although on the pre-market, still higher on Nvidia. So at least in the pre-market, it's not enough for us to lose the gleam in the eyes, and it's still looking very shiny. So Apple up as well. So it looks like we might increase that divergence today. Although if we look in our economic calendar, not much is going on today. Not too much coming up tomorrow, although retail sales is going to be, and industrial production, both of these are pretty important. However, we have Juneteenth holiday on Wednesday. I'm still not used to it. I think this is the second or third official Juneteenth. So I'm still not used to having this holiday, but it comes right smack in the middle. So we're probably going to have a quiet Monday, a quiet Tuesday, low volume because of this holiday. Retail sales and industrial production might give us a little bit of volatility, but because of the holidays right in the middle of the week, we're not going to expect too much. And then Thursday, same thing. And then Friday is where we will almost guarantee to get some volatility. Does that mean we get a whole bunch of volume or directionality in the market? It might be a false flag volume, just like the over here. This was a false flag volume. This was FOMC volatility and algorithms trading the FOMC announcement. And then the next day it just dropped right off. That might happen again this Friday because Friday is quadruple witching. That means it's the end of the quarter, or at least the quarterly expirations in the markets. So the options are expiring, quarterly options are expiring, the commodities are expiring, all of the option style of instruments, financial instruments are expiring on Friday. So of course, people need to roll over, reinvest. A lot of transactions need to be made in order to transfer cash back and forth. And so there's always volatility on a quadruple witching. It might be a good time to either avoid trading or to try to get into your new positions at really excellent levels. To avoid that, because there will be a temporary small spike in implied volatility, you may want to do all of your trading on Thursday that you might need to do because of expirations. So this week, there's nothing here that tells me that we should be getting a directional bias. There's nothing here that tells me that we're going to get volume, or at least real volume, back in the markets. So this is probably going to be another chop week. And if anything, there's going to be a little bit more pressure to the downside than there is to the upside because of the things that we already talked about. So I won't repeat myself. All right, so let's take a look at what happened in terms of, actually something really interesting. Let's take a look at SPY. We've already compared this to RSP, which looks nothing like we are at all-time highs. That is a sign of divergence right there. We did the same thing with QQQ and QQEW, equal weighted. Looks nothing like we're hitting all-time highs. So we're expecting this divergence to correct itself, although it could take a while. What we haven't looked at is the other indices for a while. Dow Jones is looking basically like the equal weighted indices. The other thing that we were mentioning, this downward TLT movement, it'll put pressure on tech, but it also put a lot of pressure on blue chip style stocks, especially if we're dependent on anything interest rate dependent, which is tech, yes, but that's longer term. And on more immediate term, it's things like real estate, utilities. So there might be an increased divergence because of that temporarily. So Dow Jones looking very much like sideways trading and the equal weighted indices. And the small cap IWM, that's one we haven't looked at in a long time. And there's nowhere near the highs, nowhere near the all-time highs, but even the local highs, the recent highs, we've come well off of it. And it's looking like we're heading towards the bottom end of these channels. So either this pink line right here or this pink line right here, which incidentally coincides with the MA200 right now. So small cap stocks not doing well, and they are the ultimate risk asset. So there's no reason to believe that we're in a super strong bull market and that the NASDAQ and the S&P are going to continue to move much higher, or that we're really in a bull market, a strong bull market in the overall markets. That a real, true, strong bull market, IWM would be leading. And then if we look at ARK, ARKK, Cathie Woods, this is like the riskiest of the risky small cap stocks. And you can see that we've just been chopping sideways and we're below all of our moving averages at this point. and we might just trade in this channel, but if we ever break it, then the markets are going down. And we'll see when we come and challenge these levels. It looks like it could happen in the next week or so. Then we'll watch that very carefully and see if there's a break or we bounce right back and trade back into this channel. So let's take a look at our sectors, and then that'll be it for this morning. Just not too much to talk about, given that this week looks like it's going to be super quiet. Oh, just a single day. All we care about is the single day. So on Friday, there was, excuse me, quite a range of movement between the sectors. You can see that home builders went way down, which is interesting because if the TLT went way up, and if we're expecting rate cuts in the bond, or sorry, in interest rates, then that should have been healthy for home builders and real estate. So that's a really interesting divergence right there. So basically, home builder stocks investors did not believe in the same rate cut possibility that the bond investors did. And then we've got, we'll just start from the bottom. The small caps way down, retail way down. That was in sympathy with that consumer sentiment report. That came in much lower than analyst expectations. Defense way down. That's interesting. Or that's on the week. On the day, yeah, still 1%. That's significant. XLI, XLB, so blue chip. Energy's down. Consumer discretion. It seems like everything, like all these sectors are down. What went up? These are just flat neutral. So the only things that went up with any sort of significance, so basically you see to the upside, XLK even is only just barely up beyond random. And then, so basically just QQQ, which is interesting because SMH, XLC, and XLK all only went up by a small percentage point, but QQQ went up by 0.5. So that's going to be interesting. I'll dig into that a little bit. And our safety, silver, gold, those are the things that went up beyond random, basically, and bonds. At QQQ, let's dig into that a little bit and see what we could why QQQ went up, but XLK, XLC, and SMH, basically all the components of QQQ did not move all that much. So there's got to be some stocks in there that are not in those three, or their weighting is not figuring in. Okay, let's say earnings. It was earnings. It was Adobe. That was it. Okay. So, do we have any earnings coming up this week? Nothing super significant. Accenture, accounting. Why does it say information technology? Maybe I'm not thinking of the correct Accenture. Yeah, I guess I'm not thinking of the right in Accenture. Okay, that's interesting. So IT services. And then we have Lennar, which is a building company, a home builder. Kroger. So some consumer staples, groceries, Darden restaurants. Yeah, nothing that's going to move markets really. CarMax, very, very localized. Yeah, so Accenture maybe a little bit is it's going to be like Autodesk. So, uh, so yeah, no major stimulants in the markets this week, and we can see that the enthusiasm across the sectors, at least on Friday, was very muted. Today on the futures, we are very muted as well. Nothing really strongly biased except for that Dow is getting even, no, still about quarter basis point, or sorry, quarter percentage point. So we're just going to expect a quiet week. So quiet that I personally might not even trade today and tomorrow, unless it's one of my program trades, or meaning that during the day, I probably won't do anything. I'll do the analysis overnight and then just put in my trades, and then during the day, I'll go and do something else because it really is looking like that kind of week with very little data coming out, a holiday right in the middle of the week. Monday, Tuesday, it really doesn't look like it's going to be all that significant. Maybe I'll set up a few alerts just in case I'm wrong and markets really start moving. But this is not the type of day where you just want to sit here and watch, because there's probably much better uses of your time. Okay. So I'm not expecting anything significant this week, or at least in the first half of this week. And then Thursday, actually, probably not too much either. And then we'll see what type of volatility we get because of quadruple witching. Okay, so enjoy your day. I don't plan on staring at these markets all day. Hopefully, you don't as well. And I will see you in the aftermarkets.